After a slow week in petrochemicals, the rebound is coming. The Petrochemical Weekly Update starts now. The U.S. Energy Information Administration forecasts energy consumption will increase over the next 30 years, driven by population and economic growth, and outpacing energy efficiency gains. I found this chart, which shows energy consumption by fuel source from the Annual Energy Outlook, to be very interesting. Petroleum and other liquid fuels are expected to be the most consumed category of fuels, largely driven by the transportation sector. U.S. crude oil production is expected to reach record highs, while natural gas production gains are largely driven by exports. The share of renewable energy sources, such as wind and solar, is expected to increase rapidly due to investment incentives and the development of more competitive technologies. You might be wondering, what impact will increasing energy consumption have on the petrochemicals industry? If you are, then the Petchem Global Market Intel Advisory, delivered by the Petrochemical Strategies Expert Network and supported by IIR Energy and powered by i2 Enabled, can help. If you have questions and want answers, ask me. You can reach out to me directly through my website, petrochemicalstrategies.com, or to the IIR Energy team by email at iirteam@iirenergy.com. Both addresses are shown on your screen. Let's look at the global petrochemical capacity developments over the past week and what we can expect to see in the coming week. I am using the Petchem Global Market Intel Start of Day dashboard, which combines site capacities and offline events with optimized feed slates to look at available capacities in millions of pounds of cracker products per day. In Asia, available petrochemical capacity was down 2.5 million pounds per day, with a planned 48-day turnaround at Toso Corporation's Japanese facility and reduced capacity at Yeochun NCC Company in Korea. This was partially offset by the restart of Moorverd Petrochemicals in Iran. In Europe, we saw outages at two facilities in the Netherlands, Shell and LyondellBasell. As I mentioned last week, we anticipated outages at Motiva and Nova Chemicals in North America, as well as offline events at Dow Plaquemine and ExxonMobil in Baton Rouge. By the end of the week, we see increased available capacity in Asia, mostly due to the Zhejiang Petrochemical Complex in China and the restart of Hyundai Petrochemical Company. In Europe, we expect Ineos Rafnes to be offline and a reduction in available capacity at Total Energies plant in Antwerp due to a planned 2-month turnaround of their ethylene 2 naphtha cracker. In North America, we see quite a few changes, with the most significant being at CPChem in Cedar Bayou and the startup of Gulf Coast Growth Ventures, the joint venture company between SABIC and ExxonMobil. Let's look at the headlines. Midstream natural gas company ONEOK Incorporated of Tulsa, Oklahoma, demonstrated that 2021 was a year of financial recovery, and the company is poised to take its financial gains even further in the coming years with the restart of two key projects. The company reported fourth quarter 2021 net income of $379 million, compared with $308 million in the corresponding period in 2020. Full year 2021 net income was $1.5 billion, compared with $613 million in 2020. Russia's invasion of Ukraine has begun to hit Europe's struggling car manufacturing industry, with Volkswagen stopping electric vehicle production at 2 German plants due to shortages of components. And finally, in the news, several news agencies, including Reuters, reported that Shell bought a cargo of Russian crude oil known as Urals from Swiss trading company Trafigura at a record low differential to dated Brent at minus $28.50 per barrel. This is the first Russian crude oil deal seen in the S&P Global Platts window since the invasion of Ukraine started over a week ago. Thank you for watching the Petrochemical Weekly Update. If you have any questions about anything you saw here today, ask me. My name is Robert Sawchuk, and I will see you next time.